Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, across the board, a mixed screen. As you can tell here on the equity side, we had the Dow and the S&P's down. Actually, the Dow was down almost 100 points on the day. It was actually down a lot more earlier, managed to rally off those lows. But where we did see the nice bid coming in was the Nasdaq, a nice recovery there. And then the Russell actually was leading the way all day. So we had a mixed sort of results here. And that Nasdaq doesn't surprise us that it's been green. We've been talking about Nasdaq strength for the last couple of weeks now over these market trend review videos. So not surprising to see that green. We also did have Apple earnings Tuesday afternoon. We're seeing Apple slightly bid after hours. So that's helping out the Nasdaq futures. As we move down the list here, taking a look at the crude contracts. The crude contract here managed to close basically middle in the range here. And then also as we take a look at the gold had a nice bid. So did the bonds here as well. So folks, we're going to take a look at all of these as always on the charts. But starting off first with our analysis with the S&P 500 dailies here, taking a look at the S&P 5, still below those 2280s that we've been watching, although two attempts down at the lows, and now we're starting to find potentially a bit of a bottom. So here's those 2280s we've been talking about, just a prior area resistance, then a prior breakout area. So far today, still not able to close above these levels, but we've also maintained above these 2260s. If we recall, over the last couple of videos, we've been mentioning how the breakout definitely needs to stay above this area because this is where prior buyers have stepped up to the plate. Now that we've failed the past breakout zone at the 2280s, now that we're trading down below it, we look to the next level of support, which would be at the 2260s. So far, no tests down below, and actually we see kind of almost like a bit of a bottoming process here. We'll have to see what Wednesday and Thursday brings, if we can maybe pop this back above those 2280s. Remember, on deck for Wednesday is going to be the FOMC rate announcement as well. That's going to be market moving. And then as we take a look at the Nasdaqs here, just take a look at this. You can see we've been making those higher highs and higher lows, just the definition of an uptrend, and you can tell our relative strength has been increasing over that time as well. So this is what we mean, right? That relative strength coming into the Nasdaq. Also, if you take a look at this area here, folks, that prior breakout zone on the Nasdaq so far twice defended here over the last few days, and so far holding up above those breakout zones. So that's good for the Nasdaq. And again, as I was just mentioning, we see the Apple reporting after hours here on Tuesday afternoon. That is slightly bid as we head into the morning here, so that should have a nice effect on the Nasdaq going forward. We still do have the Amazon and the Facebook coming up later this week as well. All right, moving on to the commodities front here, let's take a look at the crude. So as I was mentioning, the crude still in this range between the 54s down into the 51, so no tell there, no directional read. Moving over to the bonds, we had the bonds catching a little bit of a bid as we headed into that sell-off here with the equities. Again, the bonds here, folks, in this range between the 123s and the 125s. But remember that the big number that could impact the bonds here is what the Fed does with the rate announcement here coming up on Wednesday at 2 o'clock in the afternoon. If there's something unexpected the market hasn't priced in, you could see this break up and out, up and over those 125s, or down below those 123s. And then finally here, folks, taking a look at the gold contract. So folks, we've been mentioning gold kind of in a bit of a range here, right around these 1200s. Today coming right back up to these 1220s, being rejected twice at those levels. So as you can tell here, there's a prior high at 1220, a prior high, and another sort of a prior high at 1220s. To me, it indicates that there's somebody sitting up there selling their contracts of gold at 1220. If you can get above it and clear that area out, potentially you've got room to run up to the 1250s. So folks, even though we had kind of for the most part of the day, a bit of an offer building into the market, it does not mean that there's no breakouts happening. And this is the best part about trading individual equities is, folks, you can have stocks that are acting very strong even though the markets are going sideways to down. And let me just show you an example of a trade that we caught live in our trading room here. It's this ticker GKOS, GKOS Corporation. We've been looking at this for quite some time as a potential cup with handle, and if you've watched watched any of our other webinars, you know that that's one of our major chart patterns that we look for. Cup and handle, right? Huge breakout on volume if you look at the volume down below, and it was up almost 8.3% today. It wasn't earnings, it was just normal buying that occurred. And folks, we took down this trade. We actually were scale out sellers throughout the day, so we took this trade right over the 39.40s. We were scale out sellers into the into two profit targets here, and now we're just sitting on this waiting for our final third to either break out much higher or for us to potentially get stopped out down below. But folks, this is a risk-free trade at this point. This is a profitable trade, and this is why we look at individual equities that are, one, holding up better than the rest of the market. That's what we call relative strength, right? Here, we talked about this on the last couple of market trend reviews. Look at what the market's doing, right? Gapping down, selling off. Look at what the S&Ps did earlier this morning, gapping down, selling off rather. And then look at what the GKOS does during this period, just ripping higher. And that's an example of relative strength. This is why we look for stocks that are bucking the trend, okay? And then the second thing is we're looking for those breakouts out of recognizable chart patterns and those breakouts occurring on volume. Those are the three things we focus on every single day. And this is why we track these stocks, because even though the markets may be sideways down, we still have these opportunities to take long-sided trades on individual equities. So I hope you caught this breakout, folks. I hope you've been watching some of these stocks that are holding up better as the market pulls back. That's how we know which stocks have institutional buying and institutional leadership. But other than that, folks, have a great trading day ahead. Hope you join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.